Hi guys, I'm Devang Mehra from the Financial Analyst and I welcome you back to the episode 6 of the Candlestick Pattern training. Today we'll be discussing the piercing pattern. It is a two candlestick bullish reversal pattern and we have helped so many traders and our investors and clients make huge profits and money this week by using just this strategy. So we'll be discussing in this video different alternatives and multiple examples. So make sure you stick till the end to benefit from the video. But before we get started, make sure you check out our Instagram page and follow us at the Financial Analyst. And also, do not forget to join our WhatsApp group, TFA Daily, to be updated with the live stock market news. So let us get started. So, the piercing pattern is basically a two candlestick bullish reversal pattern. The prices have been falling, there is an extended downtrend, and at the end of the downtrend, we'll see a big red candle. This shows us that the sellers are still in control. The day following, or the second day, will be a bullish day. Prices are going to open lower, but at the end of the day, they are going to open higher, and there will be a new rise in the prices. So it consists of two candles. The first candle will be the red candle or the bearish candle, and the second candle is going to be a bullish candle. So let us study the characteristics in detail. See, in the piercing pattern, what is happening is due to the extended fall in the prices, sellers are in control, and near about the support level that has been formed, there will be a big red candle showing that the sellers are still in control. But on the following day, we are going to see prices on the opening session will gap down to show that the sellers are still making the prices fall. But during the end of the day, we will see prices closing higher. And one of the basic characteristics is that they need to close at least halfway above the previous candle. So this shows us that the bulls are now back in control and they are able to push up the losses of the previous day. So going to the characteristics, see the downtrend has been in force for a long period of time. The body of the first candle is going to be red and the body of the second candle is going to be green. There will be a very big or a long red candle at the end of the downtrend, and the second candle will be green, and this will open lower, or in other words, it will gap down in the opening session of the trade, but at the end of the day, it will close at least halfway above the previous candle. So this shows us that the bulls are now back in control, and this will more often than not be formed at the support level. We'll be discussing support and resistance in the coming videos, and prices then start to make new highs or higher highs and higher lows. Dark cloud cover will be discussed in another video. This is basically nothing but the bearish counterpart to the piercing pattern. So I want to come to the signal enhancements. The reversal, that there is the bullish reversal, will be very more prominent if the second day is gapping down. The more will be the gap down, the better will be the chances of reversal. So if the second day or the bullish day is opening, let's say over here, and it is closing more than halfway up, then this will increase the chances of the reversal and the prices shooting up and making higher highs and higher lows. Number two, for the signal enhancement criteria, the longer will be the red and the longer will be the green candles, the more powerful will be the reversal. So in this example, we have seen a small red and small green candle, but the longer these candles are, the better are the chances of the reversal. Number three, the higher this green candle is going to be closing into the red candle, that will give us a more stronger reversal. I will be discussing this in detail with an example on the charts, but if I have to reiterate this point, so if this candle, the candle number two, the bullish candle is closing, let us say below the 50% of the first candle, that will not give us a very good chance of a reversal. But the higher it will be closing, let us say near the opening point of the previous candle, the better will be the chances of the prices shooting up and for the traders or us investors to profit from this trade. And lastly, the larger volume, as always, is better for the reversal because it is showing us that now the buyers are coming and the demand is exceeding the supply. So prices are going to make a new high. So let us get into some examples so you can get a better understanding of how the piercing pattern functions. So this is an example of NBCC, the government enterprise into construction and capital goods. So we have seen that the prices are falling. So the condition number one is satisfied that there is an extended downtrend. Condition number two, at the end of the downtrend, we will see a big red candle. That is being satisfied. And this will be the candle number one or the bearish candle. The candle number two will be the bullish candle. The basic prerequisite is that it should gap down to show that at the opening session, the sellers are in control. This is holding true because it is gapping down. But by the end of the day, we will see that this candle or the bullish candle will be closing at least halfway above the previous candle. And this is being held true in this example. So this is showing us that now the buyers at the end of the day, they are coming into existence and the demand is exceeding the supply. That is why if we see the prices then start to make higher highs and higher lows. So that is one of the good examples of piercing pattern. So make sure you're revising this concept because this is one of the tougher concepts and will be harder to spot on the market. Let us do some other examples. So this is the example of NCC. It's another construction and capital goods company listed in the NSE. So if we see over here, we have seen a minor downtrend and the candle number one, the bearish candle, we can see a very long candle number one, and the next day the prices are gapping down, and at the end of the trade the green candle is closing more than halfway of the first candle. So our condition is satisfied, and then we see that the prices start to make new and higher highs. So if we could have entered over here, we could have made a very good amount of profit. So this piercing candle is a very good reversal pattern and will yield very profitable results to you in the stock markets. So you can use this across all time frames. I'm using it on the daily charts, but you can use it across all time frames and you can use it across all segments, for example, foreign exchange or commodities. And if you see in this example, we have seen very long candles. So that was a signal enhancement criteria. And at the same time, this is closing more than halfway. So this is also signal enhancement, giving a better reversal chances. So make sure you revise those points and try to enhance uh, the signals and try to use this with the other indicators and oscillators. I want to discuss one last example with you. This is on the charts of SBI, the daily charts. In this example, you will see that the first condition is being satisfied of a extended downtrend. We see the candle bearish number one, which is the red candle, and we will also see a candle number two, which is the bullish candle. This candle is gapping down, so the condition is satisfied, and at the same end, it is closing into at the end of the day or in the first candle. But however, we saw that the prices only rose up a little and then fell down again. So some of you will be asking me as to why is this not a successful signal? My question to you will be that, sorry, my answer to you will be that this candle number two is not closing more than halfway into the previous candle. That is why, even though there is a very good volume, we do not see a very good reversal in the prices, but we saw a very minute increase in the prices. So make sure all the conditions are being satisfied, and predominantly you want that the bullish candle is closing at least halfway above the first candle and you see a good amount of volume. So try to use this with the other indicators and other patterns, and try to see that this candle is being formed at the support, so you can have a better idea about the prices shooting up and this being a reversal point. If you have any questions, you can write to us. We have all the links in our bio. And I hope you found this video helpful. Make sure you like this video and subscribe to our channel to be updated. We will be posting new videos every Monday and Friday. Have a good day. We'll see you next time.
Hey, hey, hey! Why stop now? View our other videos to learn more. But before that, don't forget to join our WhatsApp group. Please do like and share our videos. And also subscribe to our channel. Hit the bell button to never miss an update.